Happy Saturday, everybody. I hope you guys are having a great weekend. Now, the U.S. housing market is turning into a disaster. It's getting really bad out there. We are going to look at what I believe are some of the drivers behind that. There's two charts that are really interesting that I think could inform you because, guys, listen, real estate's local, okay? Even if the U.S. housing market is a disaster, your market may be okay. We're going to look at these charts to see not only the U.S. housing market, but how Nashville is doing. We're going to do some deep dive neighborhoods in Nashville, look at some end of the month metrics. And I continue to be surprised by what I'm seeing in Nashville and where the opportunities are. Now, we are going to look at strategies that help you buy not only in this market, but anywhere you are. You can employ these strategies to find relative value and reduce your risk to the downside. Now, you also know I look at leading indicators. So everything I'm telling you is before it's published. And I really enjoy that. I'm really proud of that. So if you do find that this is helpful and informative, please click the like button as it does help the algorithm. My name's Ethan Flynn. I'm a CPA. I'm a licensed real estate agent. I really enjoy helping buyers and sellers in particularly the Williamson County market of Nashville. But if you are a cash heavy buyer, feel free to reach out. I'd love to help you. Pinned in the comments is a calendar link. You can schedule time with me. If you are not a cash heavy buyer, it's not that I don't want to help you. I love helping people buy, but it's really, really a bad time. Quick litmus test. If you're not sure, if the interest expense on your mortgage payment, not the principal, just the interest, if it is higher than what you would be paying to rent, just rent. Interest expense on most properties, unless you're putting like 30, 40, 50% down, your interest expense is typically going to be higher than what you could rent that specific property for. As insane as that sounds, that's so insane. That's what's going on right now. So without further ado, let's get into the data. Okay, first things first, month over month shift in U.S. homes for sale on Realtor.com. Now, this was Resi Club. This is Lance Lambert. He quit his job at Fortune, which, by the way, he was a great journalist at Fortune, and he's doing a great job here as well. But you can see that something weird is happening in the month over month shift. Even though the summer months were quite muted in terms of their increase in inventory, the latter months, September, October, November, have started seeing an increase in month over month inventory compared to where they were last year. Now, a good chunk of this is due to contract volume falling through the floor, but there's also something to be said about just the relative amount of listings that are still hanging out there. Now, why this is interesting. Here we can see just one more view of it. This trend, this inventory trend is starting to blast through where we were even last year. This is very problematic and this will create massive price drops. Now, if you have been watching Reventure Consulting, you know he's been in Texas and Florida showing where the massive increases in inventory are. Interestingly enough, he's not covering Nashville as much. And the reason why is because Nashville isn't seeing this. Interestingly enough, we're going increasing into the season where inventory should be dropping. Very, very different dynamic than 21, 20, 22, 2019, 2017, 2018. All years have not seen this kind of inventory shift. That is extremely, extremely important because it's going to prove my next point. Let's look at demand and interest rates. Interest rates have been rapidly falling. Now, this is a chart I created last year. So guys, this is a 2022 chart, but I'm going to explain. These blue dots are interest rates, the daily spot rate for interest rates from NerdWallet, and this orange line is demand. Now, here's what I want you to see. As interest rates were falling, demand tanked. It happened in June of last year when they were falling, and then as they went up, as soon as they exceeded the previous high, demand started tanking again, all the way up until it peaked and then it came down. What happened when demand came down? Everybody thinks, oh, interest rates fall, so demand is just going to spike. That's not what happened. That is not what happened either time last year, and that's not what's happening now. As interest rates fall, demand continues to fall. It's not until interest rates stabilize and start going back up that we really saw demand just take off. Okay, now that happened at the beginning of last year and into 2023, we saw January just absolutely explode from all the pent-up demand from those interest rates drop. So in my opinion, based on this chart, buyers typically are going to wait until interest rates trough and start moving back up before they really jump into the housing market if they were going to buy. Let's take a look at continuing claims. Now, continuing claims took a big step up, but they've been rising since September. Let's go back and look at that chart from Lance Lambert. This one right here. Look what happened. The seasonal change which really starts dipping in September, took an uptrend in September. Could there be a correlation between unemployment, continuing claims of unemployment, and active listings? Guys, this is so important to realize. If that is the case, then look out, because if continuing claims continue to take a leg up, which, look at this. This is why, by the way, this is why the 10 year has been dropping, I believe. Continuing claims just rocketed up. It rocketed up, okay? And continuing claims skyrocketing like this is going to create a dynamic that I believe will lead to much, much higher active listings. Now, why this is important and why we may not be seeing it yet here in Nashville, look at Nashville. Since September, continuing claims at that spike. I think that spike was related to the GM strike, but I don't know. But nonetheless, look at these continuing claims, just so far down, so far down. So we're trending down in Nashville. This is Tennessee, by the way, but just I cover Nashville, but let's just assume Tennessee and Nashville are relatively aligned. It's going down in Tennessee. And what are we seeing with inventory? Let's just flip on over to inventory. These are active listings. This is my daily active listings going all the way back to January. What are you seeing? Active listings have basically stabilized. Like, they're not going up. They really peaked in the middle of November, and they've just kind of been going down ever since. They're not taking on the US trend that we're seeing in other places. This is interesting because it tells me, guys, maybe continuing claims could be the key to active listings breaking trend with the past 5 years. Wow. 6 years, really. Yeah. 22, 20, 21, 20, yeah, 6 years. Breaking trend. That's that is a red flag. You guys, if you're buying in other places, if you're not buying in Nashville, you're buying in other places, you need to be watching. Your eyes need to be glued to unemployment, continuing claims of unemployment, not the unemployment rate, not whatever. Look at continuing claims if you can. I think it is the key to seeing this active listing change happen. Nashville, I'm going to do a quick update because I did this last week. I said 463 last week. Prices are dropping. I didn't understand. I said I don't expect it to last. In November, it's now bounced back up to 470, 471. That makes us flat month over month. We are flat. That's what I forecast at the beginning of this month. I'm actually surprised it came in like this because last week it was so much lower. I thought, wow, I must have missed it. But man, look at that. 471. That tells me that those contracts, when we're looking at contract volume and we're looking at what's under contract and the median price, we can really hone in on where prices are going. That is so powerful, guys. It's telling you where prices are going. So here we go. 471 sales price per square foot, 231, which is on the lower end. It has been higher in previous months, but 471 is the median sales price. And we've got a few more days. So this could change, but I believe we're going to hang around that 470, 472 mark, and it's going to be flat. If we look at 2023, month over month, we were at 472, so it's going to be flat. Okay, inventory is going to be flat. Look at inventory. That's active listings. Okay, 5937 plus under contract showing 895. That puts you at like 6,700. It's actually down. Remember, look at the inventory. The active listings are up in all other areas, but they're down here in Nashville. Now, some may bounce up in the next couple of days, so this may go up. It may be flat. But guys, that's so shocking. Interesting. Continuing claims are going down and inventory is not increasing, where the US number is skyrocketing and inventory is increasing. I don't know. I mean, you tell me, am I making the right call on these charts? Is that what we should be looking at? Because if it is, then if Tennessee spikes up, we need to be very, very cautious. So right now, we're in really good shape, but we need to be very cautious. As prices are flat, they're stable, inventory is stable, everything's stable. This is the healthiest I've seen the market, in my opinion. And I know it's not healthy, but I feel like the active listings going up are a sign of distress in the market. And the fact that they're not going up here tells me that even though we have these frozen numbers that are very seasonally low, they're not lower than last year. They're about average to last year. And we're seeing a lot of stability in the market. It tells me that if there is a recession coming, it hasn't hit Tennessee yet. It's not hitting Nashville yet. And employment is extremely strong. This is very, very powerful. Now, November of last year, we were at 460. We dropped a massive $18,000 in 1 month. We're not going to see that again this year. we're at 470. So year over year, again, we're going to have that prices are up year over year by 2.5%. That's going to be celebrated. It's noise. It's noise. Okay. They're not up. They're not down. They're basically flat. These volatile months, 478, 460, look at December 470. The market is confused. Pricing is confused. The volume is so low. There's a lot of noise. There are neighborhoods that are getting soft. We're going to look at some of the drivers. In fact, let's go ahead and do that. This one's just inside Hendersonville in Durham Farms area. It's just northeast of Nashville. We're going to zoom into this neighborhood here. And what I want to show you here, this is really important. Now, I hate that the new builds are purple and the new builds are blue and the existing are purple. So it's hard to see. So I'm going to uncheck the existing right here so you can see what's happening with new build prices. This is price per square foot over time since 2019, 2018. And you can see the new build prices are soft. And even these three, I need to check on these because I kind of don't believe it. 180 a square foot is just really interesting. So I need to check on those. But you can see the new build prices have been pretty soft this year, not increasing, not decreasing. But look what happens when I overlay existing. Existing prices are higher than new builds, guys. And it's kind of hard to see. So let me take the new off. Here you can see existing prices are running anywhere from 220 to 260, where new builds are running anywhere from 204 to 260. So new builds are eating into existing homes. The reason that's important is because if you have an existing home, you are not going to be able to sell it for more than a new build. It's going to put massive pressure on the price of your house. I would say in Durham Farms, your price appreciation is completely capped to the new builds until they fully build it out, and they've got a ways to go. So don't expect price appreciation, and you may even see price drops in this neighborhood, especially in the existing neighbors. Now you can see when we look at annualized volume, you can see the annualized volume is dropping. Why? Well, because most people can't sell with these prices. So existing homes aren't going to sell if they're competing with new builds. So it doesn't surprise me to see a pretty significant drop in annualized volume for Durham Farms. Now, when we come down here, look at the leasing. Now, there's not a lot of leasing, but when you look at leasing, here's what you need to see. In 2020, leasing was about $1 to $1.20 a foot when you leased, okay, per month. So lease per month, $1, $1.25, $1.20 a foot. When you come to 2023, we're seeing $1.30 to $1.40 a foot. There's appreciation happening in rentals. The rent rates are increasing. Now, the reason this is important, it makes it easier to rent out your house than to sell it. Maybe that's why we're seeing annualized close volume drop. And we're certainly not going to see price appreciation while new builds are undercutting existing home sales. Let's go to a next neighborhood. Now, this neighborhood's Providence. It's in Mount Juliet. It's a master plan community, master plan development that has been built out. And here we can see when we look at the price per square foot, it's been ranging anywhere from 200 to 300, really, depending on where and what type of house you're buying. And you can see, though, it looks to me like it's a lot weaker. We're starting to see new lows. Here in July, we saw one sell for a 175 a foot, 170 a foot. You're starting to see it break below 200, that 200 mark. Makes me wonder where those houses were, what exactly was happening. I think that this market is confused. Just look at the spread. We're seeing new highs and new lows. That tells me that nobody really knows where to value the houses that are being sold. And so and I've seen this neighborhood. There's a house in this neighborhood that's been sitting on the market for months and months. They can't sell it. They can't drop their price because they're over leveraged and they won't capitulate to the new build. So there's a big standoff on this house. And so I think that's why you're seeing even some of these new highs and new lows is because there are sellers that are holding out until they can sell their house for a higher price. And then there are also sellers that are like, I'm getting out of this market. It's clear that new builds are coming in and undercutting from other neighborhoods, not this neighborhood, and they just get out. So really interesting dynamic happening in Mount Juliet. Now, if you are near these neighborhoods, tell me what you're seeing. Tell me what you think. Here we look at closed volume by month, and we can see the monthly count of closed volume has been negative almost all year except for August and October. And it looks like this. It's just been trending down. Why? Because if you got an existing house and you can't compete with new builds from other neighborhoods, you're just going to hold on to it. You're going to rent it out if you can. You bought it in 21, chances are you can rent it out. As long as you didn't refi or over leverage, you can rent it out. And so we are seeing a volume just drop a lot in this neighborhood. Very interesting. Looking at leasing, we're also seeing the softest lease growth, rent growth of any of the neighborhoods we've talked about here. You go back to 2020 and 2019, you saw it was just under $1 a foot all the way to $1.20. Okay. And here we are today. It's just under $1. One closed in June, just under $1. Most of them are in this range of like under $1 to $1.20. The rent hasn't really changed in this neighborhood. So when it comes to rent values, this is a neighborhood that's not seeing rent growth. It's a neighborhood that's seeing massive decline in closed volume. And it's a neighborhood that hasn't really seen price appreciation in well over, really at this point, 2 years. No price appreciation, maybe a little bit. But I think actually you're starting to see price drops. That tells me that this neighborhood, very flat in pretty much all metrics. So very interesting. Tell me, if you're in Mount Juliet, tell me what you're seeing. Do you think that's what you're seeing? What are you seeing with new build neighborhoods? Are you seeing new build neighborhoods undercut these neighborhoods? Is that why the volume is dropping? Okay, the last one, my favorite, West Haven. Guys, this is south of Nashville. It's west of Nashville. But look at the new builds. Okay, the red is new. We're going to delete the existing. Look at the new builds. They're ranging from $400 to $480 a foot for the vast majority of them. Look at existing. Existing is ranging from $340 to $478, which is still new build range. But notice that the existing is staying below the new builds. That's what you would expect. That seems normal. They're not leading prices down. They are putting a cap on appreciation, so existing prices aren't exactly able to go up. But even the lows have been pretty stable in West Haven. Let's look at the volume. Volume has been pretty stable this year. In fact, when you look at annualized closed volume, it has stabilized at an annual rate of 200 per month. So this is an annual rate. They sell 200 houses in this neighborhood every single year. It's kind of stabilized there, 200. In fact, we could go positive in December or January based on this neighborhood. It's a very strong neighborhood. Look at the rent growth. The rent growth has been incredibly strong over the past 2 years. And now we're seeing you can almost expect $2 a foot in West Haven. This is very powerful. Look at single family, but even let's look at the condos. Even the condos, so strong rent growth there, almost $2 a foot in a condo or townhouse for West Haven. Guys, the rent growth here is incredibly strong. I would say this is very healthy, which, I'm obsessed with this neighborhood because it doesn't make sense to me. Okay, it's so far out of the way. Look how far. It takes like 25 minutes to get anywhere from there. But I got to tell you, it is a powerfully strong community. I think it's a store of wealth for a lot of people. I've seen people buy houses in cash there just as second homes. And I think you've seen it be a very strong neighborhood. It will weather storms better. It doesn't make sense to me, so I can't really comment on it. I don't really know what the magic is of West Haven. If you do, leave a comment. Tell me what the magic is. What's so magical about West Haven? So with that being said, I hope you guys have a great weekend. If you do like this video, click like, and I will see you next Saturday. Have a good weekend.